All right, let's talk about one of the absolute safest ways to make your money work for you, Treasury bills. We're going to break down exactly what they are and how you can use them to grow your savings without all the usual stress. You know that feeling, right? You've worked so hard to save up some money, but the thought of throwing it into the stock market, especially if you might need it soon, can be, well, pretty terrifying. You're definitely not alone in feeling that way. But what if I told you there was a way to earn a little something extra on your savings with pretty much zero risk of losing your hard-earned cash? Well, there is, and that's exactly what we're going to dig into today.
So, here's our game plan. We'll kick things off with what T-bills actually are, then we'll look at the pros and the cons, and finally, help you figure out if they make sense for your situation. Ready? Let's jump right in.
Okay, so let's get right to it. What in the world is a Treasury bill, or as you'll often hear it called, a T-bill? At its heart, a T-bill is incredibly simple. Think of it like this. You're giving the government a small, short-term loan. And because these are backed by the full faith and credit of the government, they're considered one of the safest investments on the entire planet. I love this analogy. T-bills aren't a race car. They're not designed to get you rich overnight. They're all about security. Your money is protected, it's safe, and you get a little thank you bonus for letting the government borrow it for a bit. So, how do you actually make money? It's a simple little three-step process. First, you buy a T-bill for a little less than what it's worth on paper. That's called buying at a discount. Then, you just hold on to it for a short time, maybe just a few weeks. And when time's up, the government pays you the full amount. That gap between what you paid and what you get back, that's your profit.
Let's make this real with some easy numbers. Imagine a T-bill that's worth $1,000 in 1 year. You might buy it today for, say, $950. A year goes by, and you get that full $1,000 back. That $50 difference, that's your interest. It's really that straightforward. Of course, how much you earn can totally depend on the economy. When interest rates are low everywhere, you might get a smaller return, like 1%. But when interest rates go up, T-bills suddenly look a lot more attractive, sometimes offering 5% or even more. But here's the key. Once you buy your T-bill, your return is locked in. No surprises. So now that we've got the what down, let's talk about the why. Why would you choose a T-bill? Well, there are some really big advantages that make them super popular. Here are the big ones. First, safety. I know I keep saying it, but your initial investment is about as secure as it gets. Second, no guesswork. You know from day one exactly what you'll get back. Third, flexibility. You're not locking your money away for decades. And last but not least, they're super accessible. You can often get started with just $100. But hey, to give you the full picture, we got to talk about the limitations. Every single investment has a trade-off, and T-bills are no different. Okay, the biggest one to watch out for is inflation. If prices for everything are rising faster than what your T-bill pays, you're actually losing a little buying power. Then there's what's called opportunity cost. By playing it safe, you're missing out on the potentially much bigger growth you could get from stocks. And finally, your money isn't available on a whim. It's locked in until that end date. So really, it all boils down to this one simple trade-off. With T-bills, you're choosing ultimate sleep-at-night safety. And in exchange, you're accepting modest growth. It's not a flaw, it's just the deal you're making. And that brings us to the most important question of all. Are T-bills a good move for you? Let's run through a quick checklist to see if they line up with your goals. So I want you to ask yourself this. For the specific money you have in mind, what's more important right now? Is it protecting what you've got, or is it taking a bigger swing for a potentially bigger win? Your answer to that is a massive clue. This chart breaks it down perfectly. If you're saving for something in the near future, like a down payment on a house, or if you just can't stand watching the market go up and down, T-bills are an amazing choice. But if you're investing for retirement 30 years from now, or you need that cash available at a moment's notice, you'll probably want to look at other options. Okay, we've gone through a lot. Let's boil it all down to the key things you need to remember and what you can actually do about it. Here's the good news. Buying T-bills is way easier than you might think. You can go straight to the source and buy them from the government, or you can get them through most banks or brokerage apps you already use. There are even funds that just invest in T-bills for you. And here's the bottom line. T-bills are the steady, reliable workhorse of the investment world. They aren't flashy, they won't make the headlines, but they protect your money and they deliver exactly what they promise. They just work. We really hope this made T-bills feel a lot less complicated.
And if you're looking for more simple, clear explanations of money topics just like this one, well, that's exactly what we're all about at Square Money. Our whole app is designed to help you build confidence and feel clear about your finances.
So, what's next? Take a moment to think about your own financial goals and see if T-bills might have a place. And if you want to keep learning about smart ways to manage your money, go check out the Square Money app. Thanks for tuning in, and we'll see you next time.